So welcome one and all to this update of Power Hour. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in the chat box in that comment section to let me know that you can, I would greatly appreciate it. Nothing worse than talking to myself for the next little while. Afternoon, Kevin. All right. I just saw your registration come through, Kevin, for Trader Super Summit in New York here. That's excellent. Hey, Robert, how you doing, my friend? All right. So, what we got here? Jim said, did I enjoy my time off? No. No. I was actually sick as a dog, canceled vacation. So the last Power Hour I taught, I got sick right after it. Literally that afternoon, I had one meeting in the afternoon, like 2 o'clock or 3 o'clock in the afternoon. As soon as that was done, I was done. Got better and then got worse all over again and canceled our vacation. So I literally went almost, not quite, but almost 2 full weeks of recovering from this stomach virus, which just was vicious, the way it attacked. So yeah, what was it? I weighed myself after 3 days. I think I lost 12 pounds in 3 days. So good for that, but not the way you want to lose weight. Yeah. So, and then last week was nice. I was at a business conference. You know, listen, I'm a big advocate of education, right? And whenever I talk to someone about this, like friends of mine know what I spend on my own education. Like, you're nuts, man. With the amount of money you spend on education, you're crazy. Well, you know, I belong to 2 masterminds for the market, and I belong to 2 masterminds that are business related. Okay. One is really growth, internal growth related, meaning you, and the other one is business growth. And that's what last week was, business growth, right? All great stuff, great content, great information, amazing contacts. And I learned how to do a TikTok video. So there we go. One of the guys showed us a technique on TikTok videos. If you look at our TikTok, you'll see that we had originally right now there's 9. We'll get another one up today, I think, but we had 9 TikTok videos up, 8. We had 8 videos up. Between them, we had less than 1,200 views. I did a video the other day of an Apple chart, 7 seconds. That's all it was. 7 seconds. Sean scanned, you know, on the Apple chart back and forth, entry, exit, put our data in there. And we had almost 900 views in about 3 or 4 hours on that. So we cracked the TikTok code without having to be 14 years old to do it. So all came out of, a business conference. So yeah, it's good to be back, Kevin. Thanks. I appreciate it. Thanks for the prayers, Kevin. Yeah, what are you going to do, Jim? Listen, right? What are you going to do? You know, it's just, it is what it is, what it is. There was a reason. Maybe there was, you know, bad stuff going to happen. So better off I don't go. So, but I'm glad to be back. Today's really my first full day back because I was supposed to travel Thursday night of last week. There was a shutdown of all airports in the New York City area. So nothing getting in or out on Thursday. So I didn't get back until Friday morning, which, you know, my wife didn't even understand the reference when I put 0:30 is when my flight is. And she's like, what the heck is that? I basically had like a 6 a.m. flight, which meant I left the hotel like 4 to get there, or 4:30. We were delayed in New York, in Baltimore. We were delayed there. And then we sat on the tarmac for 45 minutes here, coming back. So, and then we went right into Inner Circle Friday and Saturday. So those 2 days were kind of swamped for me. So this is really my first full day back. I did a little bit of catch up yesterday, but not much. It was Sunday. So a lot of stuff going on there. Brenda said, what did I miss about your vacation? I stayed home because I was sick. We canceled our vacation. Yeah, but no vacation there, Brenda. We're scheduled again in 2 weeks. And again, we still don't know if we can go. My youngest daughter had an operation, a procedure done, and she's still woozy over it. So we're not going to take a chance on leaving her, possibly, if she doesn't. We'll find out Thursday. But hopefully we can get to go away. Out of the country for 2 weeks to Israel. Good for you, Erica. That's nice. That's nice. 2 week stuff is always good. All right, so let's go ahead and jump in, keeping in mind that everything we look at is for educational purposes. Nothing's meant to be advice or recommendations. If you like what you see, anything that you see here today, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade setup, indicator, or strategy. All right, so we got a lot happening, folks. So tonight we have Inner Circle at 7 o'clock for the check-in. At 8 o'clock tonight is Monster Market Movers. This is the catch-up or the makeup for when I got sick, which is, I already went over what happened there. All right, so that'll be this evening at 8 p.m. Mastermind group is tomorrow at 8 p.m. Trading You is on the 2nd. I'm teaching there. We've got E-mini Think Tank Q&A coming up as well, which is on the 16th. So Power Hour Trading Coaches Playbook are both on regular schedule. Crushing It with Volatility, Sean has that coming up on the 3rd, which is 1, 2, 3. That would be Thursday, right? And then the 7th, which would be the following week. And then the next training behind that is Becoming a Pattern Whisperer. So you can kind of lock those things in place right now. Pop, Covered Call, E-mini Vegas spreads are all on their regular schedule. All right, here's our follow us page. Make sure you're checking it out, guys and gals. There's a lot of great stuff that we put out there day in and day out. Sean and I are getting together this week, Thursday, to record. And we've got 6 or 7 new videos we're going to be doing there. Not to mention a bunch of podcasts and things like that. So make sure you keep it up with the latest and greatest what we put out there every day. All right, here is our the Trading Boss Manifesto. So right now, let me see something here. We talk Trading Boss, right? If you go over to the website and go over to the store, okay? And in the store, if you go down to the very bottom where it says Trading Gear, right? And you click on Trading Gear, and we're going to open that up, okay? So we've got our clock in there now, and then we've got our merch. Right, I love how they name these things. Merch, hats and shirts. All right, so there are wealth builders and there are Trading Like a Boss, right? And they're going to break these up into different categories. We're going to separate them where you can just find the wealth builders, you can just find the Trading Boss ones as well, right? But go ahead and check it out, guys. Lee dropped that link in there. We have been working on this for a very long time. So when we talk about, and the reason I brought you there is we talk about Trading Boss Manifesto, right? This is what it means to be a trading boss, all right? This is what it represents to me, to my entire team, for our entire community out there, what our goal is and what we're looking to achieve, to help you achieve, to make you that trading boss, okay? And it kind of is that persona of who you are, all right? You will find this listed all over the place. I mean, all over the place for wealth builders. And even beyond that, if you look, you go to tradinglikeaboss.com, which you all should be going there on a regular basis, right? To Trading Like a Boss, which has all of our free content in there, okay? And then on top of that, we now have the robertjroy.com website. I think they got it all up and finished and ready and running and going, and at least it was. Let me shut down. Looks like it's frozen there. But that robertjroy.com, you're going to be able to reach each of the sites from each site, right? So you're going to find it listed on our websites. There'll be links back to all of them from the others. So you'll be able to kind of maneuver around fairly quickly from there. All right. So a lot of great stuff happening here. Just haven't been around to talk much about it. Kevin said, purchase mine. People really like them a lot. Lots of compliments. I appreciate that, Kevin. Good to know. Hey, Kevin, take a picture of it and send it in. I'd appreciate it. I'd love to see, I mean, I'm wearing a Wealth Builders one. I don't know if this is an older style one that we had made up or one that's still, that made the cut, because I probably have 30 Wealth Builders shirts upstairs in my closet, all different ones that we did, renditions, see what they look like and so forth. But I'd love to see it if you guys have them, to send them on in. That'd be awesome. All right. Let's see. And bring us back here. Okay. So Crushing It with Volatility. This is Sean's class, guys. Here's what I will say about the Crush It with Volatility. The conversations I've had with students over the last couple of weeks, months, just generally, how is your trading going and so forth, whether it's someone that's in the mastermind or Inner Circle, or a call with someone that I'm on with a student I'm trying to help with something. When someone brings Sean up, the thing that I keep hearing that resonates over and over again is Sean is all about them learning patience. They're learning to be patient and not rush the trade, not jump in too soon. They're learning to wait, not only in Sean's trades, but in trading, which is phenomenal, right? And Sean does an amazing job with it. So make sure you check out what he's doing there, guys, with his crush it with volatility. I've not seen anyone focus as heavily on Vega as he does. Brandon taught our inner circle this week on Friday and Saturday. And on Saturday, he made mention of what Sean does. He was talking Greeks, and he made mention of Vega and how important it is, even more important than some of the others, and just built it up big time, not because he was building up Sean, he was building up Vega, which is a Greek, right? An options Greek, but in essence, what Sean does, the importance behind it. So check it out. For your own trading, whether you ever trade with Sean or not, you need to learn what Vega is and how to use it properly, right? Oh, we don't want to go there yet. All right, so what trades have you done today? Go ahead and drop them in. What have you guys done? So again, I am just back. You know, I walked into 400 emails this morning, okay? And an interview that I had to do with somebody as well on top of that. So I did not get a whole lot going yet. I did put some trades in. I just never got a chance to check if I was ever filled. So I don't want to talk about any of those yet. If I did, then you guys will see them shortly. So Tripp said, not a great morning. It happens. Got whipsawed out of the Hakanashi scalp on IWM. The rest of the index have given no real good entries yet. Okay. Got it. Yep. And you're right. It happens. There are days that go against us. No ifs, ands, or buts, right? If we look, well, that's an open trade right there, but closed trades. So look at last week, which would have been the 24th and on, right? So the 24th going forward, the very first trade of the week was on Adobe. We got hit for $2,184. But then Booking, Adobe, Meta, and Netflix all did amazing for us, right? So you're going to have those trades that go against you. About 75% of my trades go in my direction. Excuse me. So I'm good with not winning on all trades. And I'm great, Tripp, that you recognize it happens, right? John, oh man, John, you are killing it. Wheel of Fortune on Roku, Tesla, Beyond, Naked Puts on Square, and Shopify cash flow today, $2,900. I love it, man. This is awesome. This is absolutely awesome. John, are you open to getting on a call with me to talk about what you're doing with your trades? I don't want real numbers. I don't want to see brokerage statements, none of that. Sure. Okay. So Lee, send a message to Suzanne to talk to me about John. Just write his full name down. I'm not going to say it. John G. And let's do a call, he and I, one day. I want to see what he's doing there and talk more about it with him. So great job. Great job. Paula said no trades today. Karen said $900 on First Solar. Nice. No trades for me, Brenda. I get it. Let's see. No trades for Jim this morning. Good, good, good. Erica said Roku, $472 profit, trying to get back to the swing of things after not trading for several weeks. Bingo, which is why I did very little entries this morning, anticipating that I want to ease my way back in, especially throughout summertime, right? But Roku, how do you not like Roku? Come on. Come on. Right? I mean, woo! Look at Roku, baby. It went from $67 to $95. Thank you. Thank you. Thank you. Right? That's today's candle. It's a live candle right there. Okay. Phenomenal move in there. I got some last week, but I got taken out before that $78 level, right? At 77 and a quarter. And I did not capture most of the run that took place in there. I did not anticipate that. I expected it to top out where it had before, and it just skyrocketed. And today has been just a great continuation of it. So yeah, Roku is amazing, Erica. It's just, I love it as a stock. Don't know anything about them as a company. I got Roku TV in my garage because the TV's got it on it, but I never used it. Let's see. Linda said one Tesla, 2 Microsoft, both calls up $300. Good morning for me. Nice job. And there's the kudos coming in for everybody, John, and for Erica and everybody in there from everybody else. So thank you for those. Very much appreciated that you guys do that, right? So one of the things I did want to talk about is this. right? As far as trade. So I didn't have much go off today, but remember, where was I last week? I was at a business conference. Okay. That conference started on Tuesday. It was Tuesday, Wednesday, Thursday. They were all day conferences, right? I was scheduled to leave early Thursday. I didn't because my flight was canceled. I had to drive an hour, taxi, Uber, an hour away to get to a different airport because I wouldn't have gotten home until much later on Friday, which did not work for me. But while I was at the event, one of the coordinators came up to me and said, "We need you to help out a little bit here." Sure. What do you want me to do? I need you to close your computer. Why? Because you're distracting people. They keep coming over to talk to you about what's going on the charts on your screen. They're all business owners in the event. So everybody's in there, owns a business. They understand making money, right? And all that. And I talked about being able to do this without having to spend a lot of time. So I actually had to shut down. So I was able to do some trades while I was away last week, which was awesome. Okay. Now, with that being said, one of the things I started doing in power option plays is I started measuring a different model, where we go normally on pop. And here's an example. This is what we have open right now. One contract left. We did 4 contracts on W day. We got in on the 24th. Our last exit was the 28th. And we're up $1,208, $1,209. On that, we have 1 contract left. Well, that 4 contracts, you're buying a monthly option, maybe 60 days out, 30 to 60 days out, can get expensive. Right. So for someone to do 4 contracts or 10 contracts is, maybe a little bit overwhelming. I want you to forget about the numbers that are here where it shows number of contracts. Don't worry about that. That's just the way the spreadsheet is built. All right. I have to leave that there because if I change it to 1, then it won't give me any numbers in the P&L because it's geared on either the numbers 10 or 4 contracts, which is how we started POP originally. So you can see it all dated. We had 1 trade go off. Booking went off on the 26th, which was Wednesday. 28th we had 3 trades go off on the 28th, which was Friday. Okay. I took all of these in POP, right? We took all of these. Some were day trades, some were swing trades. Like W day was a swing trade. Okay. But we had in regular POP, but we had already locked in the profits here on W day as a single contract trade. Now, it's interesting. We lost $273 on W day because the first day it was down. Right now, we're up $1,209 on W day as a swing trade. So are there going to be times that happens? Yeah, there's proof is in the pudding, right? Right there. But what we're able to accomplish there is with 1 trade, just look at what we're talking about there. We've got 4 trades that day, that last week, the end of last week. And we're up $3,646.50. Yes, take booking out of the mix. Take it out. It doesn't exist any longer, right? It is not a trade any longer. Watch what happens. If I move this out of here, we went from 36.50, we'll call it, to now $1,618. So if you take the most expensive options, the most volatile options that we trade in power option plays, here are 3 stocks that we got in and out the same day on the 28th. They were actually all on the 28th. Okay. Adobe, Meta, and Netflix. Did we crush it on any of these? No, we did not crush it. Did we do well? Yeah. But if you're trading 1 contract and you can make $448 on Netflix on Friday, where your options are maybe $5 or $7 or $8, depending on what option you chose, how deep in the money it was, and so forth. Let's say you put in $900 to do that Netflix trade, right? Which you did not with the VIX we have right now. You put in less. But if you put in $900 and you made $450, you got a 50% rate of return for 1 stinking day. For 1 day, right? Where I talk about just 1 trade, it's just 1 day, right? We're up $84,000 this year if we'd only traded 1 contract. And yes, take out the bookings of the world and the Chipotle Mexican grills, which are our highest profit positions and highest risk positions. This year, you are still up about $25,000 or $28,000 this year. Maybe it's about 30. Call it $30,000 this year on the other trades if you took those 2 out, right? And you're only trading 1 contract. Now, why do I show this? Right? Because the average person looks at trades and they see these bigger numbers and go, I can't do this with small contracts. Yes, you can. Brandon does it all the time. In E-mini Think Tank, he trades one contract. In Wealth with Spreads, in his SPX, he does one contract. Everything he does is one contract to prove to you, to show you that you can do it. I've mentioned before here that I have a very good friend of mine who's been trading the SPX, right? Brandon's way. He doesn't take anything that's listed as aggressive, none of those at all, because he knows his risk profile. If he does, he's going to manage it the wrong way and let it go against him too much and not get out properly. So he doesn't do it. He only takes the ones that do not have that aggressive connotation to them. He was doing just one contract. And he's already been trading the market. He knows the market for years. He has been a trader, okay? But has no time because of his busy lifestyle, right? And he's now at 5 contracts that he's trading, right? And doing extremely well with it. So Brandon's talking about, well, in 1 month with a contract, you're making $700, whereas, or $800 doing just one contract. Whereas if you're now doing 5 contracts, instead of making $800, you're making $4,000 a month. See where I'm going with this, right? If you can get your head around the comfort needed to trade one, then you could start to expand on that to trade more, right? Yeah, PK said the one contract is exciting. Yeah, guys, I got to tell you, I've gotten some phenomenal feedback about this from y'all, from many of you out there, that, thank you for doing this, because it's an eye-opener. It's an eye-opener to show just what one contract can do. And folks, if we go back and look here, here's every trade from Pop. Every single trade that we did in Pop, or do in Pop, is right here. Okay, every one of them. So I haven't color coded the ones from June yet and on, right? The end of June. It's actually really all July. Right, but what do you look, and you look at this range right here, actually that's a June trade. Let's just skip that and go to July. Okay, if you look, we lost $19.50 on Apple. We lost $273 on W Day. We had a break even on Costco. Everything else, winner, winner, chicken dinner, right? And where are the big numbers? Booking. Right? There's bigger costs there too, right? So if you don't, and there's not a lot of them, Booking, we lost $1,000, right? Yeah, but look at any of them, right? Google, we made $78, Netflix, $600, Nvidia, $800, Costco, $273, SPY, $234, Tesla, $500. Nice, right? You can see what's hit, where the hits are, red. We're not talking big dollars. It's not big drawdowns. John said, I started with one contract with my Iron Condor Rut trade 2 years ago. I'm up to 5 contracts currently. John, how many trades have gone against you in the last year on Rut? And congratulations on that, by the way, folks, John. Folks, it is so doable. As long as you can wrap your mind around, you don't need to make a fortune today. John said he thinks one trade in the last year has gone against him. One, just one trade in a year. Now you do one a month, maybe 2, depends on if you do a 30-day or 60-day cycle, right? But you're doing one trade a month on average with this strategy. I'm just talking generally for everybody. You spend about an hour a month managing it, except the months that go against you, you'll be more like 3 or 4 hours you'll spend to manage that trade, but it is not something that is overbearing, brutal, crazy, nutty, silly, stupid amount of time that you spend on this strategy. This is, it's funny, at this business conference that I was at, in talking, we did some breakout groups and what do you do and so forth, it was part of it. And a lot of the people there are marketing people. They own agencies and things like that, their own businesses. And we got talking about the stock market, and it's, well, who's your audience? Well, for me, and realistically for what we do, it is not the person that is wealthy with millions and millions of dollars in their own account, because normally they have a wealth advisor that is helping them, right? Good, bad, or indifferent. I know we could probably get them better results if they would learn this themselves, but that's not our core client. We have some of those, and that's good, but that's not our core. It's the individual, right? It's the football loving, family member, couple of kids, owns a house, makes X, whatever X is, right? Has decent salary in there. That's more of our core of what we do. Well, they said, well, how does it relate to a business? I said, well, how much time do you have on your hands every day? And you can relate this back as an individual. Well, I don't have, as a business, I ain't got any time. Of course you don't, because you're too busy running your business. You're working in your business, not on your business, right? So I brought the Iron Condor strategy up, and I've had 4 or 5 of them already since I left message me like, dude, we need to talk about this. I need this in my life. I can't do this without it. You know, they're making good money in their business, but what do they do with it next? Right? And real estate's always been big for business owners, right? It is for us. But how much do you buy real estate when prices are up as high as they are? Okay. So you got to find that really good deal. Let's see. Is Roman in here? He is. Roman, how is real estate in your area right now? How are prices doing by you? Which is over on the West Coast in Washington. All right, let's see if he's at his computer right now. So, folks, you can do this. So they're holding steady at this point. Good. Okay. I just saw something on CNBC that rents are down from the mid 2022. So about a year ago, rents are down 0.7%. Right. I think it was what it was. I don't think it was 0.7. So almost about 1% is what they were down. Jim said people who want to better themselves, who think outside the box, are possibly your students. Absolutely. And don't get me wrong, there are some people here that are with wealth builders that don't know a stock from a rock. They've never heard of it before. They don't have a family. They don't have a house. They don't make a really high salary, you know, which is not, again, the norm for us, but they're you know, making a fairly low salary, but they see this as an opportunity, a way to change their lives, to shift out the opportunity to do better for themselves. And that's really, if I could ever resonate on the Trading Boss Manifesto, that's where it all comes from. The betterment of you, right? It's not for me, it's for you. Y'all that know my story know that I didn't want to start Wealth Builders. I got literally tricked in a conversation with a friend of mine, and we ain't had lunch since, by the way. Not on purpose, but it just seems to have happened that way. We haven't gone out for lunch because I'm busy now. Yeah, you've got to be, exactly, Jim. They've got to be willing to learn. And that's what it comes down to. It all comes down to, what is your willingness, your desire to learn how to do this, right? I can teach it to you if you want to, but if you don't want to, then there's nothing for me to teach to you, right? So you really have to want it. Guys, this Adobe trade was phenomenal, right? When we look at Adobe, actually, you know what? Let's not do Adobe. Let me take you into W Day, right? Which we still have an open trade on W Day, right? So we got in W Day on July 24th. So let's go look at W Day. Where's July 24th? Right here was July 24th, okay? I'm sorry, 25th. It's the wrong date. We didn't get in there because we weren't stopped out. On this day, we weren't stopped out. So we got in on 25th. So we closed here. We opened here. We pushed up, retested, and bounced. So let's go look at the 25th on W Day. Didn't like that. Let's see. Okay. You know, I think what I'm going to do is I'm going to turn this to let's do a 15-minute chart. Okay. And what date did I say? I don't remember. We're going to have the 25th. Okay. So the 25th, we're right here. Okay. Right. This here is the 25th. Open, close. Okay. Is the 25th. So what happened? On W Day, we opened down here. We ran up. First candle, we closed right at support. I'm sorry, at resistance. Second candle, we pushed and closed higher. Third candle, we moved up. Fourth candle, we backed off. Fifth candle, we tested the bottom line and we bounced. That between this candle here, and remember, this is a 15-minute candle. So right in this candle, you know what? I don't have a choice. Let me take it down to ones. I don't know if I'm going to have enough days on here. Let me just change the days around. I don't have enough days to get back to the 25th. 1 minute data is a lot of streaming data. Who was, for what question, Darlo? if it was Bill. Actually, we got 5 days back. That might be enough. Let's see. We're looking for the 25th, right? It's the 25th. Okay, good. So here's the 25th. Okay. So look what happened. We pushed up, we closed, we bounced. Did we get a high enough move off of this 1 minute candle to take the entry in there? We would have to be up at 226. We got to a high of 225.5. So no, we fell down, we fell down, we fell down. We closed above. We opened, retested, bounce, right? Where do we get in at 226? Our high on this candle was exactly 226. We're filled, okay? Because our order triggers at 226, right? And so now if I go back to a 5 minute candle, and this was the open right here, right? Nope, one more day. So here's 25th. We go back to a 5, retest, bounce. Guys, it was a great entry, okay? Phenomenal entry. What is the line? Are you talking about on the chart there? 224.95, Brenda. That's 224.95, which is this fib line right here. It's our fib. We opened, we ran through, retested, and bounced. That's what we wanted to see there, okay? Good. So now what happens? All right, we're in the trade on the 25th. And I need to fix that because it said 24. Okay, so the 26th, we took our first exit. I'm going to make it a little bit smaller. Okay, 20, so we can see the days now. So here's the 26th. We gapped down a little bit. Stop was down here, so we're not taking out. We gapped down a little bit and we ran. We ran up into that 231. We were going to be at right about 230, which is where we were. We hit our resistance, so we're out about $1 below there at 230. Right? So now we got in 4 contracts. Our first exit when it's a 4 contract trade is 2 contracts. So we got out of 2 of our 4 contracts right there. We are out of half of our trade already. The goal is to be out of 3/4 of your trade by the time you get to your second exit. If you don't know that, write it down. You want to be out of 3/4 of your trade by the time you hit the second exit. And we're talking using fibs because these are standard deviations. You got a 2 standard deviation move. Most of the data points are already gone. So we pushed up, we gapped up the next day. My stop is down here, so nothing taking me out at that point, okay? We closed here. We gapped up the next day. We ran. Here's the 28th. We tagged at 235.93. So 235 is our exit. That was a 1 contract exit. We now have 1 contract left in place, okay? If we look at this, we're up $1,209 on this trade right now. Now we've got 1 contract left. The stock is at 237 right now. We got it at 226.5. We'd have a $10 move, about a $750 value of that option right now if we were to sell that option. Right now, about $750, right? Overall, woo, phenomenal, right? Considering that we made $1,200 on 3 contracts. We got the last one is $750, okay, right now. So overall, we're doing well on this. Can we be stopped out? Yes, 5 exponential moving average is our stop. So we are, and we use it on a closing basis, so we don't tip through it throughout the day, although you could do that. But just to keep everybody on the same page, so you don't get out at 230 and I got out at 3, and no, it's closing price below. That's it. Now you can make it where if it dips below, you're out of the trade no matter what, right? Just use today's closing price, or yesterday rather's closing price of the 5, whatever that value was, that's where you would draw your line and set your stop if it triggered there or somewhere down below there. I'd be careful right at it because you get bounces off it over and over again, like you did here, okay? So caution about using right at that level as your stop in there. But overall move, magnifique, beautiful, right? We still have 1 contract left, and now it's on autopilot. It's set up, it's done. We don't have to worry about it. Set it and forget it, walk away. Now, if you did this with just one contract, you got stopped out on the first day because we closed lower than we opened. So yes, right? Yes, you're out. I'm sorry. Yeah, it was, on that day, right? So you're out of that trade, okay? But overall structure, overall setup, perfect, 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 perfect. All right, cool. Do you guys like this? Is it helpful when I spend the time to walk through these like this? Just give me a 1 for yes or 2 for no. Is it helpful for you to see it this way as I kind of walk it out? Nice. Okay, beautiful. Beautiful. All right. So let's go look at the S&P 500 first. All right, riding along on my automobile. What's going on there? Oop, that's not what I want to do. Wrong key. Come on. I have too many programs open right now. Zoom is just a bear. Let me try closing some spreadsheets. Zoom is just a bear when it comes to resources. Don't save. Nope, it's not liking it at all. Oh, there we go. Finally. Okay. So back to S&P 500, right? I actually wanted to hit I did it again. Wrong key. I wanted to zoom in on it so you can see the entire fib. Okay, got it. So good strong move up. Nice pullback to the 382, bounce in a head fake breakout, retest the 100-point level. Boom. And we pushed up and we ran into the negative 382 right here. We failed. We tapped it one more time, 2 more times. We gapped up right up to that 4,600, went a little bit higher and then failed on the day. And we're struggling right now to get above that 4,600 for the last couple of days. Okay. We tagged it last week on Thursday, but we can't get above it at this point. All right. So as we're looking at the S&P, my first stopping point, my first resistance is at 4,600. We got up close today and pulled back. Right. So you've got to know your levels. Right? In your head, on paper, jot it down, whatever it is, write down in your trading journal your key levels for today. Whether you are looking at the S&P, whether you're looking at the Dow, the NASDAQ, you can do that with your stocks. What's your key level on your stocks today? Right? Snap them on your charts. Excuse me, it's horizontal lines. Use the little support and resistance line tool to draw levels wherever you need them. Right, on Omega charts, whatever tool you have available to you, just get them down somewhere that they're easy reference. You don't have to go back and pull a chart up to be able to see what that price level is. I don't want you to have to do that ever. Okay. So we're looking at that 4,600 as our first resistance line. If we're able to break that 4,600, we're looking at 4,661 as the next resistance. Now, that would be a really, really, really nice target. Now, don't get me wrong. We've been higher, right? We've been higher. Right, where we made it up. And I'm not going to be able to see it there. It's just too busy. To that high of 48.18. So we got a couple hundred points to go yet to get up there. But when you look, since this overall downtrend had taken place and we broke out, this is the range is in the highest high that we have been since the breakout happened. All right. So you can't complain. I'm not trying to rush it. Yeah, I'd like it to happen fast. So of course, I'd love it to be, the S&P to be higher because my SPY would be higher. The Qs would be higher, right? I mean, all my long-term positions would be higher. But I'm not fighting it right now. My fight is what's going on today, not what's going to happen 3 months, 6 months down the road. I am looking at day by day. I want to take this and manage this position out or this chart out of what I'm doing next. So 4,600 on the upside, 4661.36 is our next upside target. On our downside, it's very interesting that our 8 moving average, we'll call the 8 scrunch. We'll call the 8 a confluence with that 45, 42 level. Maybe not exactly, but it's going to be close enough. And then down here at the 4,500, we've got the 21 moving average at the 4,500, okay? Which once again, confluence there. We don't really use the 55 as confluence. It's okay, but it's not really what I'm looking for inside of there, all right? So we've got a lot of strength happening in here on the downside. So, and what I mean by that is, remember, it's that extra sheet of plywood in there, right? You got your floor, but they doubled up on the wood, so it's harder to break through. Moving average, fib line, whoosh, confluence, harder. Break through it, 100-point level, moving average, confluence, harder to break through. Now, the 100-point level and moving average is an easier break than a fib line and a moving average, but not by much. But it is easier to get through that level, right? In other words, it's a stronger form if it happens fib and moving average versus 100-point level and moving average, okay? Beautiful. All right. So when we look at VIX, fear's down, nothing to worry about with fear. There's goods and bads to it, folks. You know, you're going to find very low price options right now, which are awesome, okay? But you're also finding lower movements on the price of the options because of it. So because of that lower Vega volatility, you're not getting as big of a move directionally on the options price. So in other words, you bought an option for 8 and had your VIX been up near 30, maybe it moved $5 on whatever X move was, but today it might only move 3, 4. It's not moving as much. You're paying less for it, but it's not moving as much. You're not profiting as much in it. So there's a trade-off inside it. I'll never complain about a 13 VIX. You're never going to hear me say I'm paying too low for the options, but there are consequences to it. The biggest consequence, and John doesn't seem to care, right? Biggest consequence is when you're selling. You're getting less premium. John's still crushing it with what he's doing, right? So focus on the levels of the SPX, focus on what the VIX is doing right now. And those two components can help guide you on what your trades should look like, okay? All right, so real simple topic today. Let me bring this back up. When not to trade. There are some very key times. I'm not going to get all of them, right? But I'll get you a couple of really good ones right now. There are a couple of key times that you're going to look at and say, I don't want to trade. Number one would be emotional heartache and headache, right? A fight with a spouse or somebody, you know, your boss, whatever. You probably want to watch when you are in an emotional turmoil, okay? Health issues, so forth. You know, when I was ill, when I was sick for those 2 weeks, trading was hard. I mean, I managed my positions. That's really all I did because trading was freaking hard, right? I mean, it was tough to get through. And the funny thing was when I got sick, I had just gotten pop done, right? I got that complete and got sick, felt better, got pop done over the weekend with Cover Call Explorer, and I got sick again. Right? So it was like, wait a second, what's going on here? It was like God just said a little bit of grace to let you get everybody out their recordings and then right back in the thick of it all over again. Right? So yeah, Brendan said today's market has no salt. Slow. It's like watching your toenails grow. Yeah, it's grass grow, paint dry, exactly. Okay. But when you are sitting in a scenario when there's emotion in there, you want to back away. What can cause some of that emotion? Maybe it didn't start the day off that way. Maybe you get into a couple of trades that go against you. I have a 3-strike rule when I trade. If 3 trades go against me, I'm done. I walk away. Excuse me. I'll manage my open positions. I'm not entering into new positions. No more opening positions. Close out, yes. Open, no. Okay, I'm done. So walk away. All right. Markets being flat, it's a tougher time, right? For me, especially in summertime, you get beyond that 10:30, 11 o'clock, I'm not doing a whole lot of new trades through the day. I may day trade something in the afternoon if I get a really good setup, but I'm not going to trade if the momentum is not there. You got the Dow is on life support or the S&P is on life support, right? It's just flatlined. nothing for me, right? I'm not interested in that market. Right, there you go. So Jim said not to trade. Just you're a little ahead of me, Jim, but you're right. You know, he brought up one holiday, said the week after Christmas. I normally, the week of Christmas, the week after Christmas, between Christmas, New Year's, I normally don't do a whole lot of trading in there at all, right? And here's what you have to understand about what goes on, whether it's an actual floor, like what used to be on the New York Stock Exchange, or an electronic, it doesn't make a difference. If you're a Goldman Sachs and they got 400 traders at Goldman Sachs, right? And all the big boys, they get to take their vacation first. They're taking that Christmas week off. Well, who's left? All the wannabe big boys, right? So they're putting on trades and taking positions and doing aggressive things to a very unaggressive market that may or may not work out for them, but you could be the unsuspecting casualty of that. So in the Christmas, New Year time, I tend to walk away, right? Around holidays, when you have a Thanksgiving, right? Thanksgiving is a Thursday. Friday is a half a day. We trade till 1 o'clock. Market's open till 1, and then they close. That Friday, manage your trades and be with your family. That's it. Just get things done and leave it alone. There's not enough momentum to drive it, right? And then the last thing is around the Fed. Be very cautious on Fed day. Can you trade in the morning? Yes, but there is a lot of times lower volumes, which small trades can have dramatic effects on the market. So I tend to not do that. Now, I will trade the announcement itself. I don't recommend that for most, but I will at times trade the announcement as well, depending on what the announcement was. If it's, yeah, we're not doing anything different, well, there's no announcement there. It's there, but it's not, right? So very cautious when it comes to those times, all right? So when it comes to when not to trade, you got a couple of things to keep in mind, right? Look at the other emotional triggers for you. You know, if you have a day, Mondays are a tougher day for me, always. Why? Because of what my schedule looks like on a Monday. Starting right at 9 a.m. with a call to my team, right? It is a long day for me, right? So I know where my stressors are and where to back away. So you should as well, all right? Perfect. Okay, with that, what stocks do you want me to look at? We haven't got a lot of that lately. We haven't had time. I'm really rambling on with some of this stuff. All right, Karen's got First Solar in there. FSLR. Let me just switch watch lists. It won't matter for this one, but all right, so First Solar, bullish bias right now, and it's a true bullish bias. All the moving averages are in the correct order right now. All three facing the right way, okay? That's number one. Number two, we're at a rank of 2. We're near the 211, but nowhere near a confluence, right? Oh, yeah, so that's right, valid point, Karen. I'm not even looking down there, but the earnings were Friday for this. So they had a good move up and a strong pullback. So normally, so you talk about when not to trade. Normally, I'm cautious 2 to 3 days after an earnings announcement, especially big moves, unless I know the stock. If I trade Roku, which I do, I'm okay with taking a Roku trade on earnings. If I don't trade First Solar, I'm not okay taking it 2 or 3 days after earnings. I want to give it some time to settle down. And you can see what's happened with it. Long wick, just vicious move there on Friday, right? Vicious move. So Thursday, it looks like, was the earnings, and then Friday was the, probably after market, and then Friday was the big move. So I'd look for the pullback to that 204 and a bounce. We need a 200 level in here. So let's add that in place. $200. Drop your symbols in, folks. I don't have many in there. There's only like 2 symbols. So put them in. Let's see. So we've got that 204 as the first downside target, somewhat of a confluence with the 8 moving average. And that's really what I'd love to see. The pullback and the bounce, nice. I like it. I'll take it. Okay. But other than that, I would be a little bit cautious with it, Karen, because of the earnings, right? When not to trade. XOM, Exxon Mobil. 3 people in a row put in SPY. It's awesome. I love that. All right, so ExxonMobil. So we've got, if you take the fibs off of here, and we can do with fibs too, but we've got a Fibonacci channel in there between 103 and 107. Okay. So moving averages get tougher with the whipsaws, the ups and downs, as far as validity goes. They are fairly sideways, and not perfectly, but fairly sideways, right? So ExxonMobil, you could look at this. You look at ExxonMobil, if you want to focus on it as a channel, you don't look at the moving averages in there. You focus on it as a channel, you put a midpoint between these fib lines, and whatever that is, that's your first downside target. Second target is right above, $1 or $2 above that next fib level, depending on the value of the stock. But right about there is going to be your next target for it then. If now, for me, we're in a bullish bias, but we're not in a true bullish bias. What does that mean? The moving averages are not in the right order. It needs to be pink, then green, then brown. Right now, we're brown, pink, green. So the one that should be on the bottom is on the top. We need to mix that up or shift that around. But we are in a bullish bias. So I will take this, but I will take it as an aggressive trade then, not a full contract trade, because we don't have the true bullish bias. Now, with that being said, you can see that we've broken out of this 107.40 level. We broke out, we failed, and we came back in. We broke out, came in, wick, came in. Here we broke out Friday with the wick, today with the wick, and we're back in for now. Break the 107.40, get me up to 108, 108.5 level, pull back, 108, 107.75 level, bounce. There's an entry with 111 to the upside. Okay. Let's see, Brendan, I'm really grateful to be learning from the best. Well, thank you. Especially when it comes to teaching us that it's not easy, need much patience. About a month ago, I was frustrated and wanted to give up, but because of hearing you and some of the other mentors speak about having patience will pay off, I didn't give up. And now I'm working on being patient and waiting for the right setup. Thanks, Rob and mentors. Well, I appreciate that. Thank you for that, Brenda. And you're welcome, by the way. Let's see. SPY. That is a very common one right now amongst you. So because of what we talked about with SPX, we've got a very similar picture on SPY. We can scrunch this down a little bit. We'll bring it in so we get the whole fib on there. Actually, let me do it this way. I like to do that first. All right, then the scrunch. Okay. So right now, okay. All right. So right now we're looking at 457 to 465. That's $8 in there. We talked about this in Pop over the weekend. And I've got 796 of fib. So I don't really need a fib in there, but you can split it if you'd like and just put the -5. And that's fine. There's nothing wrong with that. It could be very helpful for you. But I want to get a close up, maybe that 158, 58.5 level, and then a pull back to 157-ish, not exactly, but towards, and a bounce. And I'm all over it as a bullish trade. I will be very cautious when we get up to about that 459 level. So you can do this one of two ways. You could take a smaller number of contracts on the bounce and the entry, wait for the break of either the opening price or the high back here on Thursday, and then add to your position there. That's really a decision you have to make, a call you have to make. Good, bad, or indifferent, okay? It's really your own personal risk profile. But we're looking for that potential bounce to take place off of there. If so, you've got a lot of room to the upside. True bullish bias in the right order, right? Which is very important. It's in the right order, okay? So SPY is setting up well. Hope that helps for all of you that put it in. And then we're going to go to, let's see, Jim said SPY 3 days ago, bearish engulfing candle, wrong place in the chart for a bearish outlook. Exactly. Right here, it's a bearish candle, bearish pattern, but it's in a bullish position on the chart, right? Which is the brilliance, the wisdom that Mr. Ryan Litchfield brings to us. QQQ, Brenda asked for. She actually asked for Qs before SPY, but since so many of you had asked for SPY, I threw that one in as the first one. All right. So the Qs, let's see, 375.5, we'll call it, to 387. 75, let's just call it 76 to 87. That's 11 points. All right, we don't really need a fib it in there. We're close. It's like SPY, we're close, but we really don't have to have it in there. All right. So we're a bullish bias and a rank of 3. We're near nothing. So trades for me are aggressive here. I'd be looking at pivot points on them, but they're aggressive at this point just because of where it's located. It's just, there's no good clear path in there. Now, if you say, well, Rob, we're close enough to a pivot and I want to add one in there, and this may be all the reasoning you need to put one in, we're looking at a -5. You can get that pullback to the 381.31 and the bounce, and you got room up to 387 as resistance. Okay. And a near confluence, I would call it I'd call it a confluence of the 8 moving average to that level. Right. So could we use it? It's not horrible. We're right at that cusp of where we should have it, but not a requirement for it. All right. That's next. Amazon. So I'm liking Amazon. I'm liking Google. You know, my long positions in them are doing well. Excuse me. Hopefully some of you capitalize on those moves. Give me the pullback to the 131 and the bounce. There's a strong confluence, true bullish bias. And then we're looking at 134.5. It's already had that move, so it's hard to take advantage of it now. All right. So, but that 134.5, I'm very strong on as a resistance because it's been there before and could not break out. 1, 2, 3, 4, 5, 6 days. It played on that level and finally fell partially right here, right? On that 6th day. All right, so I do like Amazon as a setup. IBM. And this was Trip, 3 day, no, my bad. AMD has earnings coming out. Oh yeah, so now I'm gonna do AMD. Got it. Okay. Man, that's an older fib. So I'm gonna wait. I'm not gonna redraw right now. And we got a good break, right? But that 143.52, if you get the bounce off at 147, would be resistance for that. Micron. All right, so MU, as soon as I redraw the fibs, I'm going to have to redraw them again because we've closed below the 882 and we're up so high right now, we're about ready to have to redraw it all over again. Wow. So we're back at that 764. We got an 882 right up in here to look out for. I just don't like. It's moved too much with that gap. I just don't care for it. I'm going to put that fib back the way it was there, Trip. So we're looking at, let's see, 71 to 74. So it's 3.5. We don't need a fib in there. So we're looking at 75 as resistance. Retest and a bounce if you get the bullish move. Just not the most excited about it because of the overall fib move. And then IWM. So for those of you that don't know it, Inner Circle has a live trading room 3 days a week that we have just for Inner Circle members. It is managed, hosted by Amelia. Tripp is in there just about every day as well. And then Roman and Daniel and Will and so many others, Scott and Mike and so forth, are in there regularly to look at the markets and for potential setups. These guys have created and developed a strategy using Hakanashi candles and day trades, and they're doing it on the ETFs, the IWMs and SPYs and so forth. So IWM has become a very big position in there, right? Which is the Russell 2000. So if we look, we've got a 200 level just above our head. We're at resistance. I like this pattern better than what we're seeing on an SPY. We can get a break above on a close, a retest and a bounce. Getting a little tight there for the first stop, which is 200. and it's 204.5. You got a lot of room in there to that next resistance level. All right. So it is a great setup. Yeah, Jim, it is an upside down H on Micron. You're right. Great setup on it if we can get the breakout, the retest, and the bounce. Okay. So I want to say this. I have seen now, and I haven't done anything because I've been, out of commission the last 3 weeks. I have seen a lot of positive conversation come from me working with you guys one-on-one, right? And what I mean by that is there have been quite a few people that have taken advantage of getting on my calendar and locking some time in with me. Lee, can you drop in the link to Key to Be Free, please? Here's what I'm going to say. In that, and this is not about, Rob, this is the strategy I'm using. How do I make my strategy better? This is about how I can make you a better trader, right? We're not there to look at your individual trades and all that. That's not what it's about. I'm going to ask you a series of questions. Since I know what I'm talking about with this, I'm going to ask you a series of questions. And in those questions, I'm going to determine the right path for you, the things you should be looking at to move forward in your trading career, what you should be doing next. Right. And I'm going to be very clear and very blunt and very honest with you of, if I don't think this is for you, I'm going to tell you I don't think this is for you. Now, I don't mean trading. I mean, should you be part of a power option play? Should be part of a mastermind group? And if it's not for you, it's not for you. Right. If you start off our conversation with, man, I am futures based and I am never going to trade anything else, well, then power option plays doesn't work for you. Right. But there are going to be some things that you can start doing right now on your own to help you propel and move forward. If you are in that place in life that you are looking for a way, an opportunity to advance yourself as a trader to move to that next level, right? And I'm going to tell you very clearly, one of my questions in there is basically being able to do what you want, being willing to do whatever it takes for you to become successful. That's a question I'm going to ask you in there. And there's a little bit more to the question, but basically, I don't want to give away the whole question to you, but because I don't want you to pre-think about it. But basically, are you willing to do what it takes to become successful? If the answer is yes, that's awesome. If it's no, that's awesome. It's okay if you're not. But it is a requirement for me to help get you to that next level. Too many people are stuck where they're stuck, and I can get you unstuck, but you're stuck in yourself by stucking in the same place you're at. That was cool. I can help get you there if you're willing to do the work, right? To put in the time, the effort, the energy to get it done. So if that's you and you feel that you're ready to move to that level of, yep, Rob, I want to move into that professional trader status. What's my next steps? Go ahead and get on my calendar. There are not a lot of spots open on it. There's just not. Go ahead and get on my calendar and take advantage of that. And make sure you show up. Make sure you know how to use Zoom. And if you don't, call in our office and we'll get you helped out with it. But it is a Zoom call. All right. I prefer you to be on camera, but it's not a requirement. Right. But when I'm looking in your eyes, I can tell when things are off a little bit when I ask you a question. I can't do that as easily on a phone call, which is what Zoom is without a camera. Right. So I can help propel you if you're willing to get there. So with that, ladies and gentlemen, I kept you a few extra minutes. We're going to leave the room open for a little while that you can go grab all those links that Lee dropped in there, particularly the last one. So with that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, everybody. I will see you at our next update. Bye for now.